Hi, this is Akmir with the Bulletin Board Heroes here at Vox Markets. It is Tuesday, the 8th of November, starting off with the FTSE 100, which has done perhaps what one would have feared it would do, which is just hit the 200-day line and come back. Ideally, support comes in between 7,200 and 7,220, which is the initial November support, and then we head up again and try and take out that April resistance line at 7,450. Below the 7,200 zone risks a move back down to the 50-day moving average around 71.13. We have actually peaked at RSI 70, the overbought area, so there is a message there from the technical indicator. On to the DAX, and here it was a relatively stronger market and still is over the last few days. We had that gap close buy signal through 13,260. And still stalling here at the 200-day moving average at 13,600. We want an end-of-day close above that to open up the idea that we could head up to the June resistance line, the top of that triangle from June, as high as 14,300, maybe by the end of this month. Moving on to the Dow, and here we can see that we've got, if I get the right market, we've got a situation where the index is been in slight recovery mode, trying to get through that line of resistance to the top of that one-year trend channel there around 32,800. Want to see a clearance of that, so ideally just to break above the 33,000 level to get us up to 35.5, which is that May resistance line projection. Stop loss on the recovery argument here, or the ongoing recovery argument here, would be back below 32,000, so relatively straightforward, or as straightforward as a market like this can be. Moving on to Bitcoin, and the situation is that we're still in a sideways drift. We had the false break to the upside, well, it turned out to be a false break to the upside last week. We're now back at the 50-day moving average, which we feared. That's around 19,600. Want to stay above that, otherwise it's going to be rather a gloomy descent back down to the 18,000 area, but disappointing that we've had the bull trap through 21,000. There's also the hint of further losses to come, given the way that the RSI is now below neutral 50, and we've broken that uptrend line in the RSI window, which has been in place since the beginning of September, so not looking good just as we speak at the moment, especially with that triangle breakdown and the false move to the upside. Moving on to the stocks of the day, and not quite as exciting as it was yesterday. So far, we can see that there are fewer rises than we had at the beginning of the week. But starting off with Aston Martin, which has in a rather unlikely way delivered on some of the upside we were looking for, stuck around the 50-day moving average. That's at 130. We need to stay above that on an end-of-day close basis to get up to filling the gap through 165, which is back in September, but looking a little bit tired now, let's say, after the rally that we've had since the 89 pence zone, basically the lows of the year. So key that, or critical there, that we stay above 130. On to Bradda ahead, which I'm covering really because it's a lithium play, and lithium plays of all shapes and sizes seem to be doing well at the moment. Just trying to break through the initial November resistance around 9 pence. End of day close above that, we could be up to 12 pence maybe by the end of next month. Stop loss, I think back below 8 pence is more than enough, given this little V-shaped bull flag that we've got there in place at the moment. Evgen is next, and here you can see that we've broken that line of resistance from the early part of last month, 2-day rally so far, above yesterday's high around 4.8 pence, looking for at least 6 pence there, which was mid-October resistance, and obviously looking hopefully to retest last month's peak around 7.5 pence. The big win here is in terms of the bull argument is the bear trap gap reversal. So we bear trap below the March support there around 3 pence, and then gapped higher. So we've held the top of that gap by quite some margin. So that does suggest we can expect or hope for up to 7.5 pence over the next 1 to 2 months on Evgen. On to Gunsynd, which has been on the back foot for quite some time, and basically for a year, which is rather painful, I suppose. Here we just got the first signs that we're going to turn around, a bit of bullish divergence there in the RSI window, trying to break through that 50-day moving average at 0.44. If we can do that on a weekly close basis, then it could be up towards 0.6 by the end of the year, which is the current level of the 200-day moving average and was resistance on the way down. Obviously, we're not looking for any fresh lows below 0.38 anytime soon. Harland and Wolff is a stock which I haven't covered maybe as much as I was hoping or should have done over the last few months. You can see that, I suppose, given that the chart has been in descent mode since at least April, it's understandable, but just the first signs of a turnaround here after a very oversold territory there, under 5 on the RSI scale. I've got a rising, sharply rising RSI now, and that suggests that we're in a rising trend channel from the end of September. Top of the channel there at 10 pence, and a break of mid-October resistance at 7 pence on an end-of-day close basis could give us 10 pence by the end of the year. A nice key reversal to the upside yesterday on the daily chart. Moving along to, and actually just a final note there, we want to stay above 6 pence, which is the floor of the channel. Moving on to Live Company, which I think was requested by somebody on Twitter. Here we've got the first signs that the shares are also trying to turn around. Not so good at this particular point today, but above yesterday's high around 2.9 pence, or yesterday's close in fact, looking for a little move up towards 3.6 or 3.7 over the next few weeks, so maybe by the end of this month. If you're cautious, you wait for an end-of-day close through the 50-day moving average at 3.2 pence, but yesterday's key reversal to the upside, bear trap key reversal, a sign that a turnaround may finally be on its way, and above 2.5 pence, that could be the case still. On to online blockchain, which I managed to resist charting over the last few days, and that was perhaps an error, but we've finally broken that line of resistance there from May around the 15 pence level. An end-of-day close above the 200-day line at 24 pence today could be enough to take the shares on to as high as 45 pence by the end of the year. As we said, not many people probably understand today's RNS, maybe answers on a postcard in terms of that. Moving along to Poolbeg, which is making great strides in the artificial intelligence area. Here we already had a gap to the upside, an unfilled gap to the upside at the beginning of last month. I think that was on the back of director buying. Second gap to the upside now, and while we're above yesterday's low around 6.5 pence, we're looking for 10 pence, which we were looking for before, and that February resistance line projection, and that could be seen as soon as the end of next month. Upside certainly valid while we hold above the 6 pence area on Poolbeg. On to Tintra, which is included today largely on the basis of the gap to the upside above the rising 50-day moving average, £2.17, above 2.17. We're still looking for a retest of the £3 area, which was last month's resistance that we had. And it's also the top of that rising trend channel from September. Finishing off with one of the more obscure plays, Touchstar. Here we've had an unfilled gap to the upside, which is one of our favorite things to happen. But the real message here is from the daily chart with the top of that rising trend channel from the end of 2018 up to £1.10. And we're looking for that while we hold above 84 pence on an end of day close basis. So let's see if that particular scenario pans out. That's it for me today. More updates tomorrow.